Yes, I must say over the years, it doesn't matter if markets are good or bad, ugly or horrible. Nilesh will always start the interview with a smile on his face. I love that about you. Doesn't matter it's a bull market or a bear market. Chalta rehta hai, right? These are phases we've seen in our life.
Because you always make us smile. So, it's always great to, be with, wonderful people like you who always make us smile, irrespective of what the market is. So I think it's you and not essentially anything else. But anyway,
So
thank you
nice,
so much.
so nice to have you back. So tell me, when people are asking that a bear market has started, how can we convince them, nahi bhai nahi, this is still a bull market and a bull market correction? Because it's intimidating to see a lot of gains and a lot of hard work of investors and traders which they've accumulated in last 18 months getting evaporated in 3 weeks.
Well, Nikunj, the final proof, of anything that you own or any investment that you make essentially is the underlying business. And if I were to kind of first start with India, and of course, clearly we are facing challenging times. We are in challenging times. There's no doubt about it. But the bottom line is that India as an economy is still kind of growing and is expected to kind of grow at 6 to 7%, maybe 50 basis points here and there. But that's still a very, very healthy number, while the world seems to essentially be in a solid slowdown. Inflation is, of course, elevated by our own tolerance levels, but nevertheless, it's still kind of way below what it is that we see in the Western markets in the developed world. So I clearly believe, again, inflation is low. And third, of course, is interest rates, of course, are expected to inch up. But it's still, in a way, relatively affordable interest rates. It's been a while since we've seen, interest rates remaining in the single-digit band, which I think, again, is very healthy. So I think on the whole, clearly the economy still continues to be sound and stable. And on top of that, many reforms have been undertaken over the last few years, which are likely to endure themselves and manifest themselves through basically a further booster dose to the economy. So overall, I believe that India is still a relatively a sweet spot. And to me, that's the biggest source of comfort and biggest source of consolation. Stock prices, yes, of course, markets will keep going up and down. There is volatility and all of that. But the bottom line is that what we own or the place where we are in is essentially continuing to grow and is adding value on a year-on-year basis. And that, to me, is essentially the best thing to happen for an investor.
I'm asking simple questions, Nilesh, because I've been asked these simple questions on my platforms, and I think it's a duty to get this messaging out. Let's look at the world. Crude is up, inflation is high, US stocks are melting, investors are taking money out, and startups are getting repriced. What is good about this scenario? I mean, this is like every cycle, every assumption, every thesis which we had about FY23 will be better than FY22 and FY24 will be better than FY22, that gets challenged. If earnings are getting downgraded, if macros are challenging, then what are we talking about? It's hard to admit that markets and economy are bad, but that is the reality. We must accept it.
So clearly, yes, of course, undoubtedly that, as I said, that we definitely face headwinds and there are challenges for markets and for investors. And there's going to be some challenges for the economy, but it's not like, say, the US economy, which has been growing at 2 or 3% and suddenly degrows at 1.5%. That's not the kind of fall which we are seeing essentially in either the economy or the business activity. Number one. Number two, keep in mind that India is also a producer of many things. I mean, the reality is that the world seems to be shifting away towards deglobalization. It's no longer just China plus, but it's China plus as well as a bit of deglobalization. And the reality is that a lot of businesses in India are suddenly facing a lot of inquiries from global customers whom earlier were just kind of looking at either China or any other place to kind of buy the stuff. They're now coming over to India and asking for products. And that's getting reflected in the pace at which our exports are growing. I mean, I don't remember when our exports actually grew at 20-25% for a longer period of time. And that's something which has happened. And mind you, I believe that journey has just begun. So while, yes, there are challenges in the world, there are challenges in the global economy, but we always tend to kind of look for what are those bright spots where we can gravitate towards, and that's essentially what our focus has to be.
Always move from undervalue to fair value to overvalue. Where are markets right now?
I probably think that the markets are fairly valued. I think that's where it is. I'd probably say that markets are fairly valued to a bit undervalued as well. And that's because still expect that the earnings growth will be there for FY23 as well as FY24. So even if you were to take a 1 year, 2 year horizon, it looks like that earnings will grow in double digits on an aggregate basis. And I think if I were to kind of look at that, we've had roughly about 15% off shave off in the frontline indices. So we have a situation where there's a shave off of 15%, and maybe even if earnings grow at 15 to 18% over the next 2 years, you're talking of the markets getting into a bit of that undervalued zone. Could markets fall further? They may fall further. I mean, the kind of stuff which is happening around us, around in the world, markets could fall further. But I think then we would basically be very clear that then if another 5% fall from here, and I'd probably think that the markets are in a significantly undervalued zone.
Nilesh, I must tell you that I haven't seen Nikunj blush, and all your showerings of love over him definitely
bond.
made him blush. In fact, I WhatsApped Nikunj as a joke saying Smriti has competition.
Yeah, it's a bro bond. Me and Nilesh go a long, long, long way. It's called bro bond, Aisha. Developed over several cup of, with Nilesh it's never coffee, it's several cups
for
of
the
chaas and
bromance.
jaljeera.
It's called bromance.
I shall have known you as well for a long period of time. So.
Okay. Acha. Now don't try and make up. It won't do, Nilesh. It's okay. We know your love for Nikunj. But anyway, Nilesh, coming back to the point that you were making. Okay, that conversation we'll have over chas and nimbu pani or whatever drink you guys enjoy. But Nilesh, just to the point that you were making that the market is looking fairly valued, I want to talk about the IT sector, which you track rather closely. The last time when you had the FANG stocks correct, that clearly rubbed off on us. This time again, I mean, there were a few earnings like in Infosys, which also gave the market that trigger to have that kind of fall in the IT names once again. What happens to IT next? Do you already start buying the dip that IT has already given you? And should you be buying it at all? Or are there better opportunities in the market?
Well, there would always be relatively better opportunities, but I think on a standalone basis itself, there continues to be a very strong case for the Indian IT sector. Just that 3 months back, 4 months back, the valuations were very high for IT as a pack in general. And we've seen essentially that kind of come off quite significantly. So the excesses which were there have come off. Now, it doesn't mean that stock prices can't fall another maybe 10-20%. They could still fall from here. But if they were to fall that kind of level, I would probably think that they become now once again great long-term investment bets. But in the short term, what's happening are 2 or 3 things. One is, of course, is that there is some correlation to essentially NASDAQ and global technology stocks, number one. Number 2 is a lot of these FANG stocks, some of these other kind of companies, as well as the US kind of companies, are customers for our Indian IT companies. And if there's a slowdown there, obviously they might kind of in a way pull back in terms of their spending on technology. And therefore, to that extent, there is going to be pricing related pressure on Indian IT companies. The third thing we have to keep in mind is that going forward, it's essentially the tier 2 space, which essentially would be more rewarding versus the tier 1 space. And why? Because if you look at the tier 1 company, let's look at, say, the most respected company in this space or amongst the most respected, Infosys. Last year, its earnings grew at probably just about 15-16%, the EPS growth. And if you look at it even over a longer period of time, the growth rates have been about 10-15%. So we have to keep that in mind, that this is essentially a 10-15% earnings growth story and not something which is growing at 25-30%. Obviously, the hyper growth, or what we normally call as hyperscalers, will be in amongst the tier 2, tier 3 kind of space. and their stock prices will also fall. But my sense is that in the next few weeks, next few months, we are again going to see amazing opportunity out there to buy and own these stocks for the next 3 to 5 years. So broadly, IT to me now has essentially now got into a buy on dips kind of a territory, and obviously to kind of own them in a meaningful manner if there were to be a continued correction of another maybe 10-20% from here.
Sure. Nilesh, since we just talked about the IT sector, does it even make sense to be market cap or sector specific? Or would you say the strategy from now on should be stock specific and market cap and sector agnostic?
Absolutely. I mean, it needs to be sector agnostic. It needs to be bottom up. Try and find businesses which are still kind of growing despite the challenging environment. And companies which essentially remain capital efficient, and where valuations you believe are reasonable, keeping in mind their medium to long-term growth prospects. So I think that's probably the only mantra, bull market, bear market. I think that's the only mantra which works for all times. I mean, that's something which is there. I don't think you need to be necessarily wedded to sectors, though you try and keep identifying those kind of sectors of businesses where you believe that the growth momentum could be a lot higher on a relative basis or versus essentially the market in aggregate basis.
Hi Nilesh, good morning. This is Nantara. I'm hoping to get a little more stock specific with you since Aisha was just talking to you about new age companies, tech companies. You told us earlier this year that you had used the sell-off to initiate a position on PB Fintech. You also told us that you really like Zomato's business because it's very scalable. We've seen what's happened with these share prices, with Zomato, even falling below its private valuation before the IPO. Did you enter any of these companies? Did you buy any of these opportunities?
We've just amongst the fresh listings in the later part of last year, the only position that we've entered into is essentially PB Fintech. We haven't yet entered into Zomato, though we continue to like what it does, but still we are not yet able to see a very clear and a distinct path to profitability as yet. So while the stock price in Zomato has fallen, but we have not yet bought into Zomato or any of the others. The only one which we have essentially invested during this year essentially has been PB Fintech, and we like what PB Fintech continues to do. InsurTech as a space continues to attract a lot of investors. I think you have to, if you look at the private market, still kind of transactions are happening out there at valuations which can still seem to be high. So it looks like the private markets haven't kind of corrected as far as InsurTech goes. But PB Fintech, of course, has continued to face the selling pressure because of essentially the market environment. But again, as a business, it continues to grow. It continues to remain a leader. And at the current market cap, I think it's trading at about 25,000 crore market cap currently. If you look at the smallest listed insurance company, which is a Max Financial, the Max Financial's market cap is 25,000 crores, which is just one insurance company and is not amongst the top 3 or 4. Versus that, PB Fintech essentially is the largest online player, which has the entire insurance canvas for itself. So just to kind of put market caps in perspective, though of course insurance companies on a standalone basis may still be good, but I think the case for PB Fintech is very strong, and the valuations have again become very, very compelling.
Yes, I also know that you like insurance companies. The last time you were here, you were talking about the opportunity they presented with the share prices down nearly 30%. Nilesh Shah, the other stock-specific idea I thought I'll talk to you about was, you told us that you were looking for 2 to 3 mid-cap and small-cap IT names, and you would buy into them when the market would provide an opportunity. Did it provide an opportunity, and which were these mid-cap IT names?
So, well, we haven't added any fresh positions, but I think 2 mid-cap IT names that we continue to own essentially are LTTS and Birlasoft. Both essentially, I mean, Birlasoft, of course, has been growing at a frantic pace and continues to essentially benefit essentially with basically the implementation of cloud. And of course, the kind of growth aspirations that it has for itself, I think are truly industry leading and industry beating. LTTS to me essentially is doing something really remarkable work. If you look at the kind of last order win that they have announced, that's with a company called Joint Mobility, which essentially where LTTS is partnering with Joint Mobility to work on the eVol, which is essentially electric takeoff and landing kind of air taxi, which I think, if I'm not mistaken, is probably the first company from India to have been able to kind of get this kind of a deal win. It's a $100 million deal win. So I think the work that they do is truly amazing. It is essentially now probably India's most independent and largest technology engineering company. And that's something which I have been liking for a long time, continue to like it. The stock price has come off quite a bit in the last 2-3 months. But I think clearly post the shave off, it has become attractive. And I think I would want to kind of really own this company from a long-term perspective.
Nilesh, you bought into Pratap Snacks, and the idea was Indians will consume more as reopening trades will start. But there are a lot of changes which are now happening in the entire food inflation basket. How do you view a stock like Pratap Snack?
Yes, so clearly that entire space has got impacted with the surge in food inflation and essentially cooking oil prices. Undoubtedly, I mean, these are essentially the price inflation there has essentially been totally unexpected and unprecedented. But our view is essentially is that over a period of time, strong consumer brands have the ability to price and pass on some of these input cost pressures. Of course, Pratap Snacks on its own had been undertaking several productivity-linked measures to basically, in a way, cushion itself. But obviously, of course, the kind of price rise that we have seen in some of their inputs essentially is going to impact their margins. But having said that, it still continues to be a good business to own. The brand continues to be strong. And of course, they kept growing even till the last quarter. So to that extent, I think attractive. And of course, the price has kind of come off about 20-25%. But still, I think it becomes very, very attractive. Just very simple barometer. If I'm not mistaken, its current market cap probably is already less or maybe just around its revenues. Basically, you have a consumer business which is available at probably one-time revenues. And of course, if you have the patience for maybe a couple of years, obviously down the line, some of these inflationary pressures will abate and they will be able to kind of take some price hikes, some other changes to ensure that margins get a bit elevated or margins come back to where they used to be. And if that were to happen, then that could create a significant upside potential in a business like that. So we continue to be positive. We continue to own it still.
Okay. Where in your portfolio your thesis is getting challenged because of so many moving parts, oil, crude, inflation? Where is the thesis getting challenged?
Well, currently it is the consumer led businesses which essentially are impacting at present. And there are some businesses which are able to take price hikes. There are some businesses which are not able to take price hikes. And therefore, it looks like is that they will continue to face these headwinds at least for another couple of quarters till they are able to kind of reprice them. So it is essentially this whole pack of the consumer space, be it FMCG, be it consumer appliances. I think this is essentially the pack which where the thesis is getting challenged for now. But we still remain very comfortable with their long-term growth prospects and the ability of these businesses to essentially bounce back. And therefore, we continue to still own them.
And would you be looking at raising extraordinary high cash levels more than normal? I'm just trying to understand that are these scenarios too complicated or this is like par of course when we look back?
No, this is par for course. These kind of volatility is essentially the nature of the beast. We are not kind of in a way raising any specific or targeting any cash levels. If we think we need to exit something and buy something else, we're essentially doing that. Because we're seeing a lot of opportunities which are getting created on the buy side. So to that extent, we are very comfortable with what we're doing.
So Nilesh, if I look at 2020, For those who did not buy the fall, they are regretting. They're saying, oh, wish we should have bought the fall. In 2022, those who have not sold, they are regretting. Oh, I wish we would have sold the rise. Now markets have come down. May of 2022, 6 months from now in hindsight, when we will look back, will this be the biggest buying opportunity of this bull market?
Well, it surely is going to be it is a buying opportunity, undoubtedly. And I can't say that at this specific point or this specific day, but definitely, I think if I were to kind of look at 12 to 18 months from now and look back, I probably think that 2022 is going to be basically creating one of the best buying opportunities.
Okay, Nilesh, always great to have you on the show, and next time we should see you in the studios.
Pleasure.